Hey YouTube, in today's video we're going to be talking about how do we present the manufacturing costs in financial statements, particularly on the income statements. We have learned in the previous lectures on the different types of costs. We've discussed the manufacturing overhead, the direct, the indirect costs, but let's see how do we present this all on the income statement. So, it is important to note in a periodic inventory system, the income statement of a merchandiser and a manufacturer only differ in the cost of goods sold. So let's explain this. Let's say you are the store owner, okay? You are selling this beautiful highlighter, top of the market, orange highlighter, excellent. You already have the caps finished. From previously, from last order, you had a big order for highlighters. You ordered a lot of caps, but you already have caps left over. But you don't have the highlighter itself. So you call up your supplier, you say, you know what, I need the base of the highlighter. So he gives it to you. So these are the cost of goods manufactured, which will give you this plus this will give you the ending finished good inventory. So in order to find the cost of goods sold, how much did you sell this for is what you had in the beginning plus the cost of this minus the ending finished good inventory minus the ending highlighter, which will give you the cost of goods sold. Nice and easy. How about a merchandiser? Over here, I am the man who has to buy a highlighter. What am I going to do? You have your beginning inventory. For example, you are going shopping and you have a grocery cart. Inside, you leave a few items inside. You leave this inside and you leave this inside. Okay. And then after, this is your beginning merchandise inventory in your shopping cart. Next, what do? You cost of goods purchased. Now, you decide to even purchase this beautiful pencil. So this is what you purchased. And what is remaining? Minus the ending inventory. So what do you leave the store with? You leave the store with this. So let's say you leave the store with this. So what is the cost of goods sold? The cost of goods sold is whatever you had in your cart in the beginning, plus whatever you purchased. So you purchased this and all of this, minus the ending inventory, which will give you the cost of goods sold. So mainly is just what you started with, plus what you additioned in order to get to minus the final, which will give you the cost of goods sold. Now, for a merchandiser, who is a merchandiser? The guy who's selling these highlighters. In order to record the cost on the income statement, it's very simple. You have to write the cost of goods sold. So what you're looking for, you have to break this down. The merchandise that you had on the merchandise inventory in the beginning on January 1st, the cost of good purchased minus, which will give you the cost of available goods for sale, minus your ending inventory on December 31st. So I should even mention January 31st, at the end of the month, or at the end when you actually sell it, which will give you the cost of goods sold. Very nice. But how about for the manufacturer? The manufacturer, very relatively the same thing. Your cost of goods sold is something that you're looking for, which is this. You're looking for this. How are you going to find this? Your finished goods inventory on January 1st, plus the cost of goods that you manufactured in order to get let's say the base for the highlighters, which will give you the cost of goods available for sale, minus the finished goods at the end of when you sell it. For example, ending finished good inventory, which will give you the cost of goods sold. So essentially, both for the manufacturer and the merchandiser, it's the same steps. For one, you are actually you have a beginning finished goods inventory for the manufacturer plus what you manufactured. Over here, for the merchandiser is what you purchased, what you bought, and not what you manufactured, because you're not a manufacturer. I hope that's clear for you. Please stay tuned for the next video. Thank you.